Hey everyone, I've identified one growth stock that's down 85% off its high, that's trading at a ridiculously cheap valuation, that's expanding its profit margins and improving the business, but it's still really cheap. The reason why it's cheap is because investors are afraid that artificial intelligence is going to kill its business. I think those risks are overblown. So I'm going to share with you what this company is, why these risks are overblown, and the reasons why I think it makes an excellent investment at current valuations.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the stock that I'm talking about here that's down 85% off its high is Upwork, the gig economy platform. And you can understand why investors fear artificial intelligence is going to ruin its business. I think those fears are overblown. Here's why. The company's second quarter revenue increased 15% year over year to $193 million, with a gross profit margin of 77%. The business model is incredibly lucrative. This platform business model is one of my favorite business models in existence today. It's where buyers and sellers come together and the platform just takes a fee off of every transaction. Now, you might know and recognize other companies that operate on the same platform business model. Airbnb, eBay, Uber, Lyft, and others that don't own anything on the platform, but they just operate the platform that brings together two sides of the equation, and they take a fee for every transaction on the platform. And those other businesses I mentioned, like Airbnb, eBay, Etsy, and there's many others, Uber, that I like, and they generate great profit margins for investors, and the capital that they generate they can return to shareholders because they don't need to keep putting it back into the business, right? Other businesses that don't operate on this asset-light business model, the profits that they generate, they're always having to put back a bunch of it into the business, always having to put back, and that leaves less capital for investors to benefit. So this has been one of my favorite business models. And more importantly, you'll notice that the take rate, which is the percentage that Upwork takes from each transaction, has been steadily rising up to 19.2% in the latest second quarter update, which was up 2.9% year over year. That allowed the company to generate $33.5 million of free cash flow on revenue of $193 million. Now, I highlighted the risks from artificial intelligence, and of course, management is aware that investors are concerned about this risk. So they went to great deal to explain that artificial intelligence, it's not really bad for the business. The gross sales value from AI-related work was up 67% year over year in the second quarter. So people on the platform are using artificial intelligence and selling their services that are now enhanced with AI. So the workers on the platform, those that are offering their services, they themselves are using AI, and so they can be more productive and they can offer their services either greater quantity of service for the same price or the same quantity of service for a lower price, because they can complete the work sooner with the assistance of artificial intelligence, and so they can offer their services to individuals at lower prices. Artificial intelligence, in my opinion, is not going to kill this business. I think it's going to enhance the productivity of the workers that are offering their service on the gig economy platform. The company highlighted that the rise in AI work plus adoption yielding 67% in year-over-year increase in AI-related work. Freelancers working on AI-related projects earn 47% more per hour than those working on non-AI-related work in Q2. Freelancers on Upwork using AI tools and apps at the 5x the rate of corporate employees. So the people on the platform, of course, are utilizing artificial intelligence because it makes them faster, it makes them more productive, and they can then sell their services at more competitive rates because they're now utilizing artificial intelligence. So that's how I see AI developing in these gig economy platforms, is that sure, it might on the margin take away some work, But overall, I think it's going to make each worker on the gig economy platform more productive. And those that use the services can get more availability because the people on the platform have increased their productivity. I highlighted at the top of the video that Upwork's operating profit margin has been improving, and you can notice that big turnaround in late 2022. The company went from negative 16% operating profit margin, jumping all the way up to 6.2% operating profit margin, and it keeps moving higher. And given how lucrative the business model is, I wouldn't be surprised if this operating profit margin keeps moving higher, upwards of 20 to 30%, and at the long run equilibrium rate. I wouldn't be surprised because of how the platform business model works and my experience in evaluating other companies that employ this platform business model. Their profit margins tend to be large. They tend to be higher than non-platform business models. So Upwork is no exception here, and they're beginning to generate those increasing operating profit margins. And I think this has a longer runway for growth here for Upwork. The analysts on Wall Street that are following Upwork stock tend to agree with that assessment. Those analysts that are following Upwork, they think its earnings per share are going to increase by 110% per year for the next 5 years. They expect rapid growth in profitability for Upwork as the company continues to grow, because it's so much more convenient to hire people in this gig format than to hire people full time. It's just so much more convenient for companies to onboard people with the gig economy platform first. And then if you want to change the way you hire people and bring them on board full time, you can still do that. But the gig economy platform allows you to work your way into it. Maybe you're a small business and you don't want to bring on a full-time employee just yet. Maybe you want to hire the task out and do that for a while before you feel confident in your business's growth prospects and before you can hire a full-time individual. Furthermore, the human resource requirement for onboarding a gig economy worker is much less of a hassle than onboarding a full-time employee. On the other side of the equation, understandably, some workers might want the security of a full-time job, but also there's many individuals who like the work-life balance of a gig economy, of a gig job, where they can apply for a project, apply for a couple of weeks of work or 2 days of work, and then take a few days off and then work again. It gives people more flexibility to work when they want to work, how they want to work, at their own pace, and then they don't have to feel like somebody is watching over them, making them show up to work in person 5 days a week, working, struggling through 45 minutes of traffic or even longer depending on where you're working at. And so the long run tailwind favors this type of work. And so the longer run tailwind is lifting the industry overall. And then individually, the convenience is adding that, both sides of that equation. And then you've got the lucrative business model in the way the business operates, all of which points to a great business for long-term investors. To make matters even more attractive, this stock is ridiculously cheap. It's trading at a forward price to earnings of just 8.569. This is trading like a company that has zero growth prospects. This is the valuation that companies like Verizon and AT&T and Ford and GM, these are companies with little to no growth ahead of them, and they're mature companies. These are the valuations they trade for. You have Upwork, which is expected to grow earnings per share meaningfully over the next 5 and 10 year periods, and you have it trading at a similar valuation. So for all these reasons, I think Upwork is one ridiculously cheap growth stock that investors can feel reasonably confident adding to their portfolios. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.